Good morning. How are you doing? How is trading and everything? So today I will be going over the way I trade, what I look for, my entry confirmations, the setup, and all of that. This mentorship is all about the strategy that I trade, especially with synthetic indices. And I want you to know that everything I'm going to be teaching you is what I have learned from ICT 2022 mentorship. So, but I'm going to give you a summarized version. If you want to learn ICT very well and you want to learn smart money concept deeply, go to Inner Cycle Trader on YouTube. Inner Cycle Trader ICT, Inner Cycle Trader on YouTube. You know, he's the baba of all these things. ICT is the founder of SMC or the father of SMC. So whatever I'm going to teach you is a watered down version of ICT, the 2022 mentorship. So you can go over that. There are about 41 videos there. Just patiently watch all of them, it will help you. But what I'm going to do now is to give you, like I said, a summarized version of my strategy, how I approach the market, the synthetic indices market. So this is our course outline. These are the things we're going to cover. First of all, we'll talk about the setup, record structure, entry, and target. All right. You need to understand that when you talk about technical analysis, the first thing you look at is trend. Trend. The second thing you look at is candlesticks and chart patterns. The third thing you look at is for market structure. Market structure. Candlesticks, candlesticks and chart patterns. Third thing is market structure. The fourth thing is indicators. So all I have listed are what people consider when they are talking about the traditional way of analyzing the market. But what I'm going to show you is smart money concept. Smart money concept is the way the big banks, the big financial institutions, the hedge funds, the central banks, the way they approach the market. You understand? That is smart money concepts, right? It is a form of technical analysis that doesn't really use trend line, indicators, support and resistance, all those. No. It just look at the chart, just the pure chart and the candles as they appear. All right, let's go into work. So today I want to discuss market structure. Let's start with market structure. All right, and that is really the strength of price action. The strength of price action is market structure. All right, so this is volatility 25 index on the 1 hour time frame. So I want you to look at this piece of price action from here all the way here. I wanted to look at that. Let me do something. Okay, good. So look at it. Listen carefully. Now, traditionally speaking, you know that this is a higher low, this is another higher low, and that is it. You know that is a lower low, and you know that from here again is another lower low. Okay, these ones are called major highs, these are major highs, and these are major lows. Okay, another thing I want to draw attention to is the fact that there are small highs in between, small highs and lows. in between, small highs and lows in between. So those ones are called minor lows. Okay, minor lows or internal lows, internal structures, external structures, internal structures. So internal structure is found between two external structures. Are you there? So between two external lows, we find internal lows. Are you there? So I want you to know that there are external highs and lows, and there are internal highs and lows. The external ones are the major ones. External, internal, internal. Okay, anything in between. Sorry, please. Oh, Jesus. External lows, external highs, external highs. Everything in between. You see it like from here to here is one swing move. Okay, from here to here is one swing move. And from here to here is one swing move. It's like this. Now, why am I saying that from here to here is one swing move? So look, from here to here, this is not a new high. It didn't clear this. Sorry, it didn't clear this. And if you look into it, when we traded down, we were able to clear it. So putting up a new high. So if you are talking about, the swing move from here, it did not end here. It ended up here. Because when price came down here, it didn't put a lower low. Didn't see that? It stopped here. So this is still the most recent low, right? So bear that in mind. So it's like this, then all the way down here, then all the way up here, then all the way down here. So this is your usual higher lows, lower lows, higher highs, higher lows, all those stuff. You are familiar with those ones. Okay, so I'm teaching you market structure. Market structure is the skeleton of the market. As the market moves, it leaves structures, you see. And traditionally, we call them support and resistance zones. Okay, it's resistance zone, support zone, resistance zone, ceiling and floor of the market. Maybe so, ceiling and floor of the market. That's what they used to tell us. So, but in the terminology of smart money, this is a supply zone, a demand zone. Look at a supply zone, bears overcome bulls, so the market goes down. At a demand zone, bulls overcome bears, so the market goes up. Right? A supply zone is a zone where sellers overcome buyers, and a demand zone is a zone where buyers overcome sellers. Right there. So at what do you call it? At a supply zone, at a supply zone, sellers overcome buyers. Market goes down. At a demand zone, buyers overcome sellers, so market goes up. Keep that in mind. The next thing I want to talk about is the concept of break of structure. Break of structure. You gotta know that. So I'm on the 5 minutes time frame, and let's look at this downtrend. Let's say from here. Yeah. Okay, look at this. So we need to point out the major lows and all the major lows. This. I think let me just stop there, and then this. These are major highs, right? These are major higher lows. Alright, this is a low, a low, a low, a low, a low. These are all major lows. Where are the minor highs and the minor lows? When I say major mine, I'm talking about externals. External high, external high, external high, external high, external high, external high. External low, external low, external low, external low. Where are the internal structures, internal lows and internal highs? Internal highs, internal highs, internal highs, internal highs, internal highs, internal lows, see one here, see one here, see one here. These are internal lows right there. Please bear that in mind. Bear that in mind. Internal lows, external lows. So the next thing is the concept of breakup structure. Alright. So that if we have external lows and internal lows, that also will tell you that it's possible to have internal breakup structure and external breakup structure. In smart money, breakup structure is some people use BMS, break of market structure. Some people use BOS. So I use BOS, break of structure. That is smart money terminology. All right. Now, so I want to show you how when we talk about breakup structure, what do we mean? That is when the market sweeps liquidity above or below old highs and old lows. When the market sweeps liquidity above old highs and below old lows, it normal with displacement. I emphasize with displacement. With displacement, that is what we call a break of market structure. Now I'm going to explain everything. All right, here you need to understand that above old highs, liquidity is resting above all these highs, and liquidity is also resting below old lows, right? Below all these low highs and lows, they are just liquidity. Right now, listen. I don't want to use too much of ICT terminology because doesn't really help. However, if you go to ICT 2022 mentorship on YouTube, there are 41 videos there. It will help you. So I'm gonna just avoid too much ICT terminologies. Now, up here, ICT will tell you buy side liquidity is resting there. And I just tell you liquidity is resting there. Below old low, sell side liquidity is resting there. So I just tell you liquidity. Liquidity is liquidity. It doesn't matter if it's buy side, it doesn't matter if it's sell side. Money is money. Liquidity simply is money, means money. And money is the fuel for price movement. Money is the fuel for price movement. When the big financial institution puts in money, put money into the market, the volatility increases. Volatility increases. So let me just show you some sweeps of liquidity. Look at this. We have above this high, we swept liquidity here. See, price traded above it. That is just it. When price trades above old low, old high, it's called liquidity sweep. But it's not just liquidity sweep. Liquidity sweep is such that after a sweep, there's a turnaround. You see, it just what you call stop hunt. Traditional people calls it stop hunt. See, that's what we call liquidity sweep. Stop hunt. Okay, so I'm going to show you breakup structure now. So this is called a breakup structure. Breakup structure. Breakup structure. Breakup structure. Like that. Now listen. Can you see this breakup structure? You can see that energetic candle breaking, sweeping liquidity above this old low. Here again, we see this energetic candle sweeping liquidity above this low. Here again, we see this energetic candle sweeping liquidity above this old low. So that is what we call a break of market structure. When price trades aggressively below an old low or above old highs, it leads to a break of market structure. So here we see structures breaking to the downside. Break of structure, BOS, another one BOS, another one BOS, another one BOS. And if you are using the internal ones, you can see the internal breakup structure. Everything I'm pointing at is external breakup structure. So look here. And do not be confused. So you may be asking, which one are we going to use? Is it external breakup structure? Internal? No. Just follow me. Just follow me. That's just it. So Maybe I should start using my horizontal line. Okay, and with MT5 you can actually add text now. Is it text they call it? I saw it recently. Okay, text. Let me try it out. I've not been using it, but I saw it recently. Name. BOS. Why is it not showing? I don't really have time, and I don't want the video to be too long. Draw. Text. Name. Oh my god, that's what the mistake is. BOS. Okay. Look at it. Here we have. Sorry. Okay, so we have our breakup structure there. So I'm talking about this one. Breakup structure. So that's what we call displacement. Displacement. You're a science student. They say speed is equal to distance all over time. Sometimes we use distance and displacement interchangeably, but it's not so correct for physics. But for here, they just use them interchangeably. Now, displacement is simply the product of speed and time. Speed and time. However, all I want you to know is that when you have an energetic move, a power move, a very strong Marbozo candle, thrusting through a high or a low, it leads to a breakup structure. Look at this candle. There's displacement. It's not a wick. It's not just that the wick. Okay, I will show you that kind of example. I'll show you as time goes on. But ICT said for you to have a breakup structure, there must be displacement. You must see an energetic candle like this one, thrusting through an old low or an old high. That's displacement. Power move above old highs and old lows. Power move, power move. Okay. So you see too many breakup structures. Alright. So the next thing I need to show you is what we call market structure shift. Market structure shift. Market structure shift. Market structure shift. Market structure shift, or what you call shock. Shock. Some people call it shosh. Change of character. Change of character. Change of character is the same thing as market structure shift, MSS. So now, market structure shift is also a breakup structure. The only thing that is different, the only difference between market structure shift and breakup structure is that market structure shift is the first indication of a reversal. The first indication that price is going to reverse. The first indication that price is going to reverse. That is what we call market structure shift. Okay. So I'm gonna show you something. Can you see this uptrend? See this whole uptrend. Alright. So where are the external lows, external highs? External lows. It's all external lows. But look what happened here. When price traded into this area, so from this low we pushed and made a new high. But look what happened here. When we made this new high and traded down, we traded back up, created a new low here, then we traded back up. When we traded back up, we could not put up a higher high. So there's a failure swing. So we couldn't swing up from here above this high. So when we couldn't go high, we broke below. You see, so making this to be a break of structure, making this to be a break of structure. You understand? But not just a break of structure. This is a special type of break of structure called market structure shift. This is show. I don't know. I may just have to. All right. Let me. Should I write? No, there's no need. There's no need so that I can be fast. Like here. That's change of character. The first indication of a reversal. Change of character. Market structure shift is the first indication of a reversal. First indication of a reversal. So you can see. All right. Just a moment. Let me look at V. Is it V25? No, V75 1S. All right. This asset is dropping. Okay. V25. Okay. So let me make sure I explain this thing to you very well. What do you call it? Change of character. Okay. Look at this downtrend. So you see this downtrend. So what is going to happen is this. Before the market reversed, we have all these highs, and this is really the last external high. And see what has happened. We couldn't go lower below this low, so there's a failure swing, and then next thing is a break of structure. So this kind of break of structure is what we call market structure shift, MSS. You see that? Please, everything I'm talking about, you know, you have work, you have serious work to do. Market structure shift, you have big work to do. So if you look at this area, you now discover that we pushed all the way up here, and then we came to this and went back up. So look. From here, we're able to put up a high, and then only for us to come and break structure. When we broke structure, we established a new low, and upon establishing a new low, price went back up here. Notice that we could not sweep liquidity above that high. So only for us to slash down. So here is the thing. Where do we have a change of character? Where do we have market structure shift? So is it up here or here? So you can pause the video and think about it, even though I'm going to answer it. Where do we have a break of structure in these two scenarios? We have two. We have this low taken out, and we have this low taken out. Where do we have market structure shift? Market structure shift is up here. Is this one? That's the first indication of a reversal. The first indication of a reversal. And when we broke structure below there and came back and established this low, only for us to push up and have a failure swing. From there we dropped. You understand? So that is that. So let me now do something, and then I will shut down this class. All right, maybe I should use this. Okay, I think this is more perfect. So record structure, record structure, record structure, record structure, break of structure, break of structure, break of structure, change of character, change of character, break of structure, break of structure. That is that. Please look into this thing. You can pause the video and look at it. So the question remains. Look at it. What I want to ask you is this. So, where's my... Alright, so here, if you look at this high that was taken out, look at this energetic candle. So it is a good break of structure, a valid one. Alright, look at this one. The high was taken out by this energetic candle, so it is a valid break of structure. If you see this one, this big candle took the high out. It is a valid break of structure. If you look at this one, valid break of structure. You can see that energetic candle, valid break of structure. You can see that energetic candle, and all the way here, valid break of structure. You can see that energetic candle. But here is the thing. Here's the thing. When we broke structure above this place and we established this high, what happened? We broke another structure here. Broke another structure here. Can you see that? So we here you probably will be talking about, okay, this is 5 minutes time frame. So of course higher time frame will tell you a better story. But looking at this, you'll be thinking, it's still on reversal. We don't get change of character. But when we put a new low right from this high to this low, and then we started going up, look, we're able to trade sweep liquidity above here. And they didn't trade, we won't trade higher. Or is that equal highs and lows? Let me see. You can see that we swept liquidity above that. So this is what ICT call relatively equal highs. It's relatively, not like equal highs. No, it's relatively equal highs. So you see what I'm saying? What I'm saying is that when we put up this high and came back down and started going back, we traded above it. Above the old high, above this high. So you really cannot say market is going to turn around, even though we have market structure shift there. So that's why we tell you that market structure shift is the first indication of a reversal. It's an indication, it's just an indication. There are other things that will tell you that market is going to reverse. Okay, so from here, we traded down again. This high is higher than this high. So this market is still willing to push up. So, and then from here we shot all the way and went above this. So it's higher high. So market is still willing to go up. So that's why I'm telling you that if you are marking here to know your breakout structure, you have to extend it all the way and see that we broke structure there. Then the next thing is, if I put this line up here, you see that we have an energetic thrust above that zone. So this is all you need to know on market structure. There's nothing more. There's nothing more. And don't forget what I said. The traditional people, they will call all of these support and resistance zones. Support and resistance zones. But we that trade SMC, we use supply and demand. That is the first thing. The second thing I want you to know is that these zones are turning points. Here, market turn bullish, turn bullish, turn bearish, turn bearish, turn bearish, turn bearish, turn bullish. These are turning points. They are turning points right there. So these are turning points in the market. You can see market from here turn bearish, from here turn bullish, turn bullish, turn bullish, turn bearish, turn bearish. So that is how it works. Change of character here, break of market structure, break of structure, and all of that. You should be familiar with all of this. So Our class on market structure is done.